The Rebel Capitalist Show.
What do you think about us being, or the world being in a long-term commodity super cycle?
It will be very volatile. So I agree with Cuppy that there's a new normal, and the cost structure, especially for building a new mine, new oil and gas wells, the cost structure, there's lack of personnel, there's a shortage of steel pipe for building new oil and gas wells. There's enormous problems on the supply side. So if the free market was allowed to make investments and didn't have all these government restrictions and supply chain problems, it wouldn't be as big of an issue. But as I've discussed in past interviews, a lot of the oil and natural gas reserves globally are held by governments and these national oil companies, and they're not very good at reinvesting oil profits back into their oil business. They are, over the last couple decades, they've used more and more of their oil and natural gas profits to fund all different types of their governments and for social program spending. Yeah. So that has starved their national oil companies of capital.
Yeah. And then here in the West, you're doing a Elizabeth Warren profit tax, or whatever she's calling it, windfall profit tax, which reduces the amount of capital they have to allocate to creating more supply in the future.
Well, there's other governments that are discussing this. Windfall profits have either implemented them or will, or they've either already implemented them or they're discussing right now. So this is a big problem. Now, this doesn't mean that commodity prices are going to go straight up, but it means that we're going to have a new normal. $2 to $3 natural gas here in the US, those days are basically over. That natural gas was at a loss. There was tons of shale natural gas byproduct that was just flared off. It wasn't put in a storage tank. We didn't have the liquefied natural gas facilities to export it. There's going to be more, as the US exports more liquefied natural gas, the domestic prices will have a new normal, a new higher price floor. That's just how things are. And when energy, and the energy is so important for food and many other businesses, the energy costs for manufacturing, that if there's a higher energy price, and this is what I'm worried about too, a key theme here, George, in the next 2, 3, 4, 5 years, we could see unbelievable amounts of volatility in oil, where maybe in the short term, the oil price, and I don't think it's 100% guaranteed that the oil price goes down, because the OPEC data that came out, I wrote an article on this for my patrons over the last weekend, where 2 million barrels, over 2 million barrels per day, the OPEC and OPEC plus countries missed their production quotas. So OPEC, even though they raised how much oil they could produce, they missed it by another 2 million barrels.
Right.
So they're not hitting their numbers. So this is why you have oil prices, despite the bad economic data and inflation and companies announcing bad earnings. This is why you have the market worried, and China's coming back online. So the market is saying that more demands, even though the consumer here in the US is dealing with high gasoline prices, and that might destroy some demand, the market is saying that Chinese demand is going to offset some of that. And then also the market's looking at OPEC data and saying OPEC's not increasing their oil production like they said they would. And they haven't for the last 8 months. They've missed production quotas. So we may see, George, I really hope I'm wrong about this, but I know a lot of people like Josh Brown, who's an oil hedge fund manager, and Cuppy, they think we're going in the next couple of years, and a lot of it's because of bad policy from all these different governments, bad energy policy, 250 oil or higher.
Yeah. Chris McIntosh has talked, I don't know if that high, but he's talked about prices going up significantly. Eric Townsend talked about prices going up significantly as well. And those guys are sharp cookies for sure.
Well, in that scenario, the consumer would have to spend more of their income on food, energy, rent, the necessities. So you're seeing this now in the data, that the consumer is strapped, their savings are crashing, and they're cutting back. So this is why Netflix has a busted business model now. You're seeing a lot, they can't keep raising prices. They have too much competition, and the consumers, there's a lot of reasons why Netflix has a busted business model. I was early on this. I wrote an article on this 2 years ago, how Netflix would eventually have a busted business model. But now we're starting.
I think if I had to be in the stock market right now, I would just make sure that I owned stuff that people need, not stuff that people wanted. So you don't need Netflix. You need food. You need energy. And, Zoltan, I don't know if you read his paper on it or his interview, but he said it very well, that the last couple crises that we've had in the United States or globally, the central banks can kick the can down the road by just producing more liquidity, money printing, whatever you want to call it, or just expectations policy, changing the rules, off balance sheet stuff, printing bank reserves. But they can't print food. They can't print shelter. They can't print energy. They can't print stuff. So if you have a crisis of stuff instead of a economic or a financial crisis, that's a whole different ballgame. And that's the world we're in right now.
So higher food prices, higher energy prices, gasoline, diesel shortages, supply chain problems. If you're a small business owner, I haven't met a small business owner in the last 18 months who hasn't told me that their costs aren't going up. Pretty much across the board, 10%, 15, 20, sometimes even higher costs. It's a new normal of higher cost structure. And this is on top of governments in a lot of areas wanting to raise taxes.
Yeah.
So trying to pass on higher costs to the customer is going to be a big challenge, especially when people have this declining consumer discretionary budgets, George. But yes, I agree with you that owning food, having access to food, energy, industrial metals, these things, it's a question of the right price, what company you're buying it at, if you're buying it at, or you're buying like an ETF, a basket of these stocks.
Yeah,
because if you buy,
I'm definitely not saying indiscriminately buy. I was just saying if I had to put money to work right now, what would I do? Not saying that that's optimal by any stretch.
Well, I think owning commodities is shorting central bank policy because the policies are so bad from governments and central banks that commodities are going to do very well. Even if there's a slight drop in demand, the supply side problems for a lot of these commodities are that bad.
That, I think, is very profound. That it's like shorting central banks, central planners, and the global elite by owning commodities.
Well, I mean, that's what China's doing as their policy. So instead of buying US treasuries, what China has decided to do with their trade surpluses is they want to just keep building warehouses and put nickel in there. They want to keep building warehouses and put more copper. And we don't know the exact amount of warehouses that they have of industrial metals, base metals. They say they have 5 or 6 strategic petroleum reserves, but they can keep building more if they want. So this is it's a long-term strategy, though. It's not a short-term strategy.
Yeah.
But the problem with commodities, though, that a lot of your investors who are new to this is the volatility. So a lot of these futures contracts, there's a lot of leverage involved, and you can have a lot of volatility in commodity prices. So if your listeners are not familiar with that, you could have very volatile moves in a lot of these commodities. We've had in these fertilizer stocks, the potash and other fertilizer stocks, the potash price temporarily dropped. I mean, we're just seeing story after story after story of countries banning wheat exports, banning fertilizer exports, higher food prices, shrinkflation, supply chain problems in food. This problem is not going away, even if fertilizer prices over the short term in the last 6 weeks, they dropped 30 to 50%. My gut here is that over the next 2 or 3 years, these prices are going higher because food prices are going higher. And guess what? Crop yields are falling, George. And then if the politicians are going to force more corn ethanol into your each gallon of gasoline here in the United States, that's less land that's being used to grow food.
Yeah. So maybe by buying commodities, you're actually going long the insanity of the politicians. Maybe if you're bullish on politician insanity, then buy commodities.
Well, your show's politically incorrect. We're giving them the finger.
Yeah, there you go. There you go, buddy. You and me both. Well said.